Happy Tuesday, everybody. Welcome to another episode of Get Technical. Thank you for joining me. How are we doing today? Let me know in the chat how you're feeling on a Tuesday. Neal, am I going to talk about the Bros IPO or the Donut IPO? Yeah, sure. Happy to talk about it. Meh. You feeling meh, Shelly? Shay's doing great. A2, doing well. Recovered. I'm at just about break even from some L's that I took on Friday and on Monday was when I realized my losses. About break even. How'd I do it? This morning, there were some nice structures on the 10 minutes for Palantir. So Palantir, bullish engulfing candle on, let me get a little bit bigger than this. Bullish engulfing candle on the 10 minute here. Oh, wait, no, that's yesterday. Okay, so it was over here. Yeah, but this bullish engulfing candle. So it just calls. Palantir made money back. Shay, good to see you too. Good to see you too. Jordan Belfer, what's up? So that's how I got back in the saddle. Was just a pattern you guys got to watch for. Very, very simple. Bullish engulfing, end of trend, reversing upward. Price target, hard to say. But I was setting my sort of like I'm out of here price where this gap starts. Looks like Palantir might be doing something now on the 10 minute as we go into the close for the latter half of the trading day. But that was it. Unity was also a good play, but I didn't do it. Matter was also a good one, but the bid-ask spread was so wide on it, I didn't want to scalp it on a 10-minute option trade. So I didn't do that one. I have leaps on Matter that I'm just holding. I took an L on Monday, but staying in there long. I just wanted to open the show with a trade idea that you guys might not have thought of. But your boy literally just forgot what the ticker was. Oh, okay, yeah, it's RHP Hospitality Trust. Just want to start off with a little classic cup with handle. I feel like we haven't been doing them a lot. A really conscientious, good-looking little twinkle in his eye. Perhaps my imagination. It was Santa Claus talking to me on Twitter. Was asking about cup with handles today. So I figured we'd do a classic little cup with handle. So we got a cup with handle here on RHP on the daily chart. All right. We're at about $85 right now, which has us just pushing above what we call the right pivot in a cup with handle formation. Of course, the aggressive traders who would have noticed this before would have just been looking for this break in trend. And then this candle would have been your entry to target the level we're at today, actually a little bit lower than that. But we are now looking at old school cup with handle more conservatively, because the current candle is a little bit uncertain. Looks like a little candle with a turtleneck on. We want us to wait and see what happens. I think a good entry is going to be a solid. It can even be a 15-minute close. Even if you want to do a 30, a 15-minute body close, as long as the body is closing above your conservative entry, which is going to be the high from this wick, which is 86.58. I would go for 86.60 there. For the entry, now you're targeting a nice 104. All right, depending on how you play that puppy, could be a nice little trade. All right, so that's for a conservative gain of 20.6% on a classic cup with handle there. All right, give us a 1 in chat if you like cup with handle from time to time. Yeah, Power Hour is totally cutting into Neal time. You guys make the decision right now. Where do you want to be? You want to hang out with this guy, talk technicals, or you want to hang out with Power Hour? You're not going to hurt my feelings either way. Oh man, we haven't talked about the VUZI jacuzzi in a while, Shay. The VUZI jacuzzi. Oh yeah. So VUZI, I lost interest right about when it broke. Like this is funky. I was being a funky guy. I was being a silly boy. This was kind of dumb, but I was looking for this to be a bottom and for us to begin our markup following that. Obviously didn't happen. We had a breakdown in structure, not unlike what's happening with Wish right now. If y'all know Wish. So VUZI I'm looking at the daily. I just want to see that I'm not long VUZI until I see a couple of things. One is I need irrefutable proof that this is the bottom of this downward trend. And then following that, I need to see a candle that's going to break this trend. So get out your little line tool. You don't have to be exact with it. Just don't try to be exact or anything. Just draw a slanted line, and that's what you want to break above because we haven't been able to. So that's VUZI Jacuzzi. Jeff, welcome. Let me know if you need anything, Jeff. Palantir on the hourly, you got it. Thank you for putting the time frame in there, William. That helps a lot. Palantir. So Palantir, I started at the top of the show saying that I made back some of my losses from Monday by scalping Palantir calls this morning. Palantir on that 10-minute time frame has gone back down. I got it when it was pushing up in the morning. It's gone back down. So I don't want to remove some of this stuff. I think I can clean it up slightly though. Like this can go, that can go. Yeah, and we still want, okay. And let's switch to the hourly. Oh, nice. Okay, so you're looking at this saying, okay, this thing found its bottom for the day. This thing found its bottom for the day, potentially flagging where it is right now. I would tell you what would be really nice is if this candle was just a little bit taller. So I drew these lines previously. We are having a tough time getting past 26.62. In general, that's coming from this level of resistance. Probably goes back a bit further. Meh. Yeah, it's this wick right here, I guess. Here, let me get rid of the Ripster stuff. Or just hide it. Same issue here that we just had with the last one we were looking at. You just want to see a strong candle tell you that we're getting out of this. Right? Show me that you can get out of this little descending thing that you got going on, this little descending channel. So we just need to break above that channel on the hourly to start going long. This one, I think, like all of them, I think if you're looking for swing positions, we got to wait and see. Because let's go back to SPY as sort of our leading indicator here. And this is where I will turn back on the Rifster clouds. Look in the past. Look at these dips in the past. Dips in the past, dips in the past, dips in the past. We need a strong green candle for folks to start having that buy-in confidence. So for swings, I'm still on hand sitting mode. In the morning and before the close, I have no problem scalping with options because I'm in and out 30 minutes maximum, something like that, maybe 40, depending on what it is. And that's what I did this morning. Worked out fine. Got out before it started to turn around after volume started to drop after the first hour of trading. All right, so Papa Bull wants to look at BBIG. You got it. Oof. So we're on the 1 day. BBIG is just broke down right now. So it's got to show you that it's found its bottom. This is similar to what we just discussed for another one. Look at the hourly. Yeah, even the hourly, not looking too good. I'm going to delete every single drawing I have on this. And I'm going to hide the Ripster clouds. Just look at the price structure. This price structure, Sloppus Tapas here on the 1 hour. So now what you want to see is this level being built upon with some sort of reversal structure, right? Like we've got this downward trend that we need to break out of. Early indications of that downward trend are going to look like little butt cheeks, a unibutt, or a rounding bottom. Or I don't think you'll really see it in this short of a time frame, but something like an inverted head of shoulders. You want to see that structure, or you'll want to see a red candle like these, and then a green candle like this, the old bullish engulfing. So if this candle were to close, body close above this red one, like here, I'd say go. Get out quick, not for a swing. I'd say for something short term. I'm gonna take this on a repeat. It's gonna be annoying as hell. Yeah, I'm on wait and see mode right here because this thing looks like it could mark down some more. It's got to show us that it's time to start that people are starting to accumulate shares. Lost my RSI. There we go. All right. So do I think BBIG can hold 6? I think it could lose 6. It definitely could. Anything could happen. Because I don't see any. You got to see some sort of reversal structure here. So let's go to. I'm looking at hourly. Let's go back to daily. I'm going to delete everything I drew. Hopefully you redraw on that if you have questions about it. Yeah, this is a bit of a neckline right here. So there's kind of a neckline for this trend reversal structure at 777. I'm going to go to the highest point down to that neckline. I mean, it could certainly go lower. If this thing resolves, which I mean, it totally could. You're going right back to the highs that you had in this rounding bottom. So this is, what is this, like $3, like $3.15, like about $3.15 is a relevant level for this. And you also just got to look at your most immediate levels of support. I'm going to go down to the 1 hour. Your most immediate levels of support above that, you just got to watch for them to get breached. Like right here, you got this thing, which is about that big. So yeah, I could definitely fall below 6. It's sort of got this whole area as a demand zone, which could go as low as, well, 555, so not terribly lower than 6. That was the low on this candle here this wick. But there's caution, red flags, caution signs all around this thing. This is not when you buy the dip, you want to see signs that the dip that you found the dip, that you found the bottom. And this 1 hourly candle out of this sequence of reds, not strong enough to get us above this big red one. I think it has a little work to do. All right, so let's look at SOFI. So it broke. SOFI had this nice double bottom. We're looking at hourly, but this is going back to the 19th of August. This nice double bottom here. We got up into, we actually hit our target price. So our target price from this double bottom was we hit it exactly, was the lowest level in the double bottom, subtracted from our neckline, which is where the meat of the trading happened here, which is where the resistance is on the left and the right, as well as where you see the majority of trading happening in the middle. And then you add the difference between those two prices to the neckline, which got us right up to here where we pivoted into a downtrend, which may have been a nice little bull flag. Remember, when you've got flags coming up, so this one was like this. That's good. This is good. This is bad, generally. This one, you've got to see the breakout before you really trade it like a flag. This one, it went the opposite way. It broke down. So we came out of that structure. A little bit of bottom action right now. Higher lows than before, which is a good sign. Let's see if we can line those up with the past. Yep, resistance has become support here at about $14.38 SOFI. Let's switch to the daily. I just want to get an idea. No problem. Here, let me delete everything. Yeah, you're just going to want to see, in general, this is the theme here today. For a swing, draw your line here, sloping line of resistance. We want to get out of that. Just draw a line on your chart. Let me see how that is with moving averages. Yeah, so it's stuck right now. The resistance for SOFI for the past 2 days is the 20-day moving average. I'm pretty sure that's 20-day. Yeah, that's the 20-day moving average is resistance there. And then the $50 to donuts is going to line up with this quick trend line that I've drawn. So crossing the 50 is going to be a good sign that we'll get more of those CanSlim style investors into the stock. Likely seeing the 20-day actually cross above the 50 when that occurs. Convergence of a faster line and a slower line with the faster line going up above it is a go sign. That's a buy signal. Yeah, the jacuzzi sprung a leak. The VUZI jacuzzi's got a leak for the moment. Okay, so just while we have these moving averages, AI, C3.ai Inc., just while we have these moving averages up, I believe it's called a silver cross, the 20-day crossing the 50-day. So my red line is my 20-day. My green line is my 50-day simple moving averages. This convergence is something to watch for, and then that cross is often a buy signal, but never rely on the moving average, that type of buy signal alone. Rely only on levels and known patterns, as well as any momentum indicator. I'm using RSI and volume. You're best off just looking at the price structure and looking at the volume that's coming in. You want volume, lots of volume to be producing big moves. So AI and the daily, not great. Not great. So we've got our demand zone here. This is pretty much where, when we get down to about 47, between 47 and 44 bucks, investors say, I'll buy at that level. Investors have not since like back in July and early August told us they would buy much higher. We had a breakdown the second we got higher here. We had a gap down. Looks like that was an earnings misstep, perhaps. Oh, it was a surprise. They probably had bad what do you call it, guidance for the future. So they said we did good, well this past quarter, like really well. We beat expectations by 21.24%, but next quarter I don't think we're going to do it. And the investor's like, all right, why would I be invested in you? I'm selling. So that's where forecast guidance for the future is more important than past performance when you get to earnings. This once again, guys, we'll go ahead and just do it like this. Show me that you can get out of this sloping line of resistance. If you can get higher than this, that's great. Which is this level. Let's see. And we could be establishing a nice base here. You could look to this. Let me look at this, see what it looks like on the weekly. Kind of head and shouldery. This could certainly be the end. I'm here, but it looks like it's going to do a little more sideways trading before we get to a point where we're truly oversold and we can watch for the next bump. TX. Wait, okay, TX was the ticker. Ooh, geez Louise. What was your trade on this? Shay, what was the TX situation? Ooh. So this is one of two things. This is where JC Peretz from All Star Charts would give you a question mark. Is this a pullback or a failed breakout? We'll know once we go through these levels here. So we'll say this general area. So we break down out of this general area, you're going to say that's a failed breakout. That thing's going to cruise down. The fact that it's cruised down so much already is not very heartening, especially over the course of several weeks. Let's go to the daily here. The little double top there. Oof. Not great there. Let's go back to the weekly. But we're at this handle here, this 43. Not really handle, but it's previous highs. We shall see. A lot of times these sort of bases like this will pull back. But damn, this base is massive. This is not even a base. This is like 40 bucks. Jeez Louise. Yeah, I'd say what you can look for if you're looking for a long thesis, a technical long thesis.
Oh my God.
What?
He said that was a thanks for checking VUZI TX.
Wait, someone said thank you?
Yeah.
Oh, that was Dude, TY is thank you. Who does TX?
Or TNX, like tanks.
Dude, we work with this guy. I'm not going to call him out. A little bit older, probably is used to using computers back when you called them terminals. Whenever I ask him a question, he, instead of saying yes or no, he responds with Y or N. So he'll give me a Y. And every single time I feel like he's asking me why I just asked him a question.
Yeah, like
because
it's like a binary. Like I only have like one, you know, it's like 1 or 0.
Exactly. I'm like, can you just give me an E and an S?
I did see someone in the chat asking about FUBO, and I took a quick look at FUBO's chart, and it looks like we're at a. Are you laughing?
Yeah, I just like the Shay. Whatever Shay's emoji is you got this. Thanks.
I think it's a thumbs up,
Shay.
maybe. Or like
thank you. You guys got this too. A big get technical. You got this. All right, AB, you come now. You're here to interrupt me. I thought I was doing good, guys. Let me know on a scale of 1 to 10 how I was doing without producer AB to reel me in. Scale of 1 to 10. Let us know in the chat. 10's the best. One's the worst.
Head and shoulders? Can the shoulders ever be higher than the head?
No.
I don't know what's going on in FUBO's chart. It looks like we could be going back down to 16 to 35.
Here's FUBO.
Looks great.
Oh, hold on. Can you take a look at this really quick? Jordan Belfort. All right. Take another Quaalude. Shay, thank you. Of course, Shay's happy. Etc. Always hard on me. Tapes. Charlie 11. That's what that gets. Old Man Chimp. Macho Man. Yeah. Proton 25. 9. 11. 12. 10. 8. 7. No, Ember. Thanks, Ember. Jerry Watkins 420. Happy Muhammad. Happy Muhammad. I feel like I haven't seen you for a little while. I thought this was a snap of fingers, perhaps. Yeah, I don't know, but thank you. You got it too, Happy Muhammad. Inverse head and shoulders. Alex Cobb. Thank you for the 8. All right, so AB's here. We got the AB magic. All right. All right, so we're looking at the weekly for FUBO. Not good.
Yeah, that's what I'm feeling too.
So here's what I said last week, or whenever we last looked at it. I'm going to keep the Fibonacci on here. The Fibonacci is the black dotted lines, which you guys can. Oh yeah, you can see it pretty well. Wedge structure with a pretty clear apex, which I drew this apex line, I believe, based on the volume profile. So let me pull up the volume by price. Yeah, which is like I had highlighted this sort of volume curve that we had. I know we're getting like a little more complicated on this one than we ever were with other ones, but this thing wants to stay in this zone. It really wants to stay in here. It can't get out of this point of control. At any rate, I drew the wedge. I said, if it breaks up out of here, we go long. If it breaks down, we don't. So it's broken out of that wedge structure, which would have been really nice. So I don't see anything interesting in the immediate term. I'd say for FUBO, I'd move on to something more interesting.
But would you consider getting in on a short position?
I don't like the short stuff.
Yeah,
I would do like more like a spread or something like that. Yeah, because there's plenty to go long on right now. And we could be at the bottom of this situation. You know, like there's nothing stopping tomorrow from having a big fat green candle and then just blowing up all of your short positions.
Yeah, I'm excited. Tim Quast should be joining us any minute now. And I'm excited to ask him about kind of where the market sentiment is, in his eyes, if yesterday he felt like was was a bottom or if there's still more, negative sentiment out there. All right. Yeah. Old man Chimp, you caught me. I was asking about FUBO for myself. I'm in the red on the trade. Damn, might just have to bomb out. I don't know. I don't like to give up. I'm not giving up.
That's
on
the
FUBO
right
yet.
attitude. Yeah, cut your losers, guys. Nvidia, por favor. See? Captain Cappy was looking at this one earlier. If you guys don't follow, God, I just drank like 42 ounces of water. I got the hiccups. Captain Cappy was looking at this one. I wanted to ask you, Captain Cappy, did you look at a shorter time frame to see what we're looking at here? So in this shorter time frame was interesting earlier. This is scalp city, although the options for like, so I mean, when I'm scalping the options, I'm looking at a Friday like of this week expiration. So I have no idea what those would be priced at for Nvidia, but Nvidia is like notoriously highly optioned. So the prices are super high. But this would have been just wicked. Oof. Not interesting now. But I think Captain Cappy, and let me know, give me your notes. What do we got? TSM looks like it's in a nice demand area. That's interesting. So TSM, of course, being somewhat of a peer, or at least a sector adjacent stock. So let me delete this thing. We got a rounding formation, right, guys? You guys all know your rounding formations. Go down to daily. This rounding formation, and then is it over? So the neckline is made really clear for us with this gap. So we're gonna use this as the neckline. I'm gonna draw you a nice little bowl on top, a little bowl cut. This is me back in this is me in 2002, the year 2000. That's my nose. My nose looks like, geez, my nose is fucked up in the year 2000.
Before the surgery.
Before the surgery. And there's my ear. Yeah, that's a bowl cut, guys. All right. So we look to the highest point. We measure down from our lowest point, which is, we actually have a bit more to go on that. So let me do that again. Doesn't have to be like to the tick. And we did it. We did it. I would count this wick hitting this line as resolution of that rounding top. Now, since we've had this little intermediate sell-off, now we're looking for an intermediate oversoldness and accumulation and a markup in Nvidia. So we're in the demand zone, and I think it's interesting because we have a gap to close as well. Right now, the structure is not something that gives me a lot of faith. I'm not really interested in this for the time being. I mean, it would be cool to see it on the hourly maintain this upward trend and form an ascending triangle, which is an actual reversal pattern. So we have this downward trend, and then one of the reversal patterns that you should know is the ascending triangle, where this is the neck or the resistance level, and you have ascending ascending support. And then you look for a break above that resistance for your entry. And that's a solid body close above. It can be as small as 15-minute candle. And then your target for that, and like this is like early days, so it doesn't count until it actually starts getting closer to that neckline, is look at that. Look at how all that stuff fits together. Is the previous resistance. The target price for that ascending triangle is that previous resistance. So what I'll do is just go target price, and then I'll change this to our entry. And that's the way I would look at it. But in the meantime, there's nothing. And if you want to be shorter term than that, it's choppy. It's choppy. I wouldn't do my thing with like my little scalpy options trades on this thing. But that's the hourly where you're able to see that level of detail. All right. I believe we have a guest with us today.
We do indeed. We have the illustrious Tim Quast. CEO and founder of Market Structure Edge. So without further ado, I'm going to go ahead and bring Tim on. Hey, Tim, how we doing?
Well, thank you. Illustrious. That's man, the adjectives get harder and harder to. You need to lower that bar, Aaron, so that I don't feel any pressure. But it's good to see you guys. Well, and I think I'm a little bit late, and I apologize. We were coming down from Steamboat Springs today, and and we hit some traffic, and that's why. But if you should have on your bucket list, whoever's listening, got this. Okay. You need to see the autumn aspens in front of the Gore Range in Colorado before you die. It's because it is just absolutely spectacular. It will cause you to see the planet as a canvas that is beautifully painted.
I've seen it,
and it's worth it, isn't it?
Yes, it's absolutely. There's a very few more beautiful pieces of real estate than that area of Colorado and many parts of Colorado.
Wait, where was this? Where was this again? One more time.
So the Gore Range is a mountain range right by Silverthorne. So there's Silverthorne, Dillon, and Frisco, and Breckenridge. And Breckenridge is further south, and then you come up toward Frisco, and then into Dillon, and then Silverthorne. And that's where I-70 and Highway 9 meet. So that's where we turn to go up to Steamboat. So Steamboat Springs is about 90 miles north of that spot. But it's the iconic, outside of the Maroon Bells, it is the iconic Colorado view. Is those mountains are just they're craggy and spectacular, and there's some snow year round, and now they're just splashed in yellow and orange and red, and it's just wow. You just you as you said, Neal, it's hard to find something more beautiful. The Northeast has beautiful colors too.
It's okay.
It's not bad.
Yeah, Colorado, lots of great painters from the area. Every time I've been out there, I've seen some like folks from like the turn of the century, great painters, landscape painters. All right, Tim.
Right.
We've got a lot of questions about the market. They're already loading up in chat.
It's more like a Jackson Pollock painting. The market is. And for those who don't know who Jackson Pollock is, he's the guy who just splashed paint randomly on canvases. So that's that's a good lead into how market structure. But it wasn't a surprise, right? We talked about this, Neal. Yeah. We talked about how options expirations were going to be turbulent, and the most important trading day of September would be Monday, September 20th. Mm-hmm. And son of a gun, it was. And it was not a guess. This is market structure. It's understanding the behaviors that drive price and volume and what that might create and the reasons why. And I think it's very important for traders to have an understanding of that. Because if you're just trying to trade stuff, but you're not aware of your surroundings, you can get caught in these kind of situations, and you don't want to.
Yep, caught in 4K, as they say. I think
exactly.
I was caught in 4K in a couple situations on Monday. Okay, so we've got some tickers. I'm not sure how you want to go about it.
I saw you were looking at Nvidia, and we could do that. So we could, if you like. If your audience wants to know, well, why would September 20 matter? We should do that, and then let's look at is it time to trade things? And if so, what? Where? What? Yeah. And how would you know? Those are three big questions. So let's maybe first, I'll try to keep it brief, Neal. I know you're laughing already because it's.
I just want to know when I can trade again, Tim.
But that's all everybody cares about, right? It's not. Let's not talk about I like to talk about it because it takes repetition because people ignore it. Yeah. So it's. If you don't first get the basics right, and you say, well, yeah, I don't want to do that. Well, remember, the Malcolm Gladwell adage is that it takes 10,000 hours to be an expert at something. And you say, well, I'm not spending 10,000 hours on market structure. You don't have to. We've done that. I have done that. So, but now we can share with you so you don't have to spend 10,000 hours when you should do things and when you should not do them. So first, why September 20? New options traded yesterday. So the derivatives market is gigantic. It is the tail wagging the dog, to use a Karl Marx aphorism. He's the one who coined that phrase. And I am not a Marxist, but he had some interesting things to say. So we'll give him credit for that. So there are hundreds of trillions of dollars of derivatives that have dates certain, and those dates certain, a significant part of them fall about the third Friday of every month. And then people will decide what they're going to do. And this is not just you and me betting on options. How are options going to perform before they expire? It's derivatives that substitute for index positions. It's global macro hedge funds and all kinds of stuff, right? So if that money says, well, I'm not as certain as I was when these reset in August or June, and so I'm not going to do the same stuff. Well, if you're not prepared for that, that's a big divot in the market that will catch you. And so that's why this period matters. The September 20 new options traded. We could see in the data there was less demand. There was not much index rebalancing that occurred right at that point. It was more high-speed traders. They don't want to own anything. So you would look at that and say, well, there's a very high likelihood that the market declines. And so it did. Now, the question is it past? And can we resume trading? Well, there's another important thing to know about today. Today is the day, we call it Counterparty Tuesday. And it happens every month. And it's the day each month when the banks that traffic in these derivatives, Goldman Sachs describes itself as being in the risk transfer business. They help people offload risk onto somebody else. That's the business they're in, right? So they true up their books today. It's, did we make money, lose money? Do we have stuff we could sell? Do we need to buy stuff? Do we need to cover stuff? All of that is occurring today. It's why the market is doing reasonably well, but not having much direction. Tomorrow, we're out of that. Tomorrow is a good time to resume if the data indicate, because now you have all of the interferences out of the way. So now we want to know, well, what's the supply to Nvidia? We'll come back to Nvidia, but I want to look at the big picture first. I always like the big picture. And so this is broad market sentiment. This is measuring the short-term supply-demand fluctuations in the S&P 500. And it's measurable. There are consumers called traders and investors, and they have different purposes and time horizons, and that is mathematically measurable. So we measure it. And when those behaviors tell us, oh, there's a nexus of supply and demand, oh, now supply has risen above demand, what happens to the market? Well, in most cases, it declines. Well, the nexus was right here. September 7, this was the day where it's not perfect. Like, wouldn't it have been great if you could have left the day before or on the 2nd, right before Labor Day? It's a pretty good day. But so this is the supply-demand equation. And it told us, well, that was the nexus of supply and demand. Now the demand curve is coming down. What's the market likely to do? Well, there's a strong likelihood, particularly with options expiring, that it declines. Now it's very close to a bottom. If we expand this out and look at the history, most of the... Yes, please jump in.
Would you mind doing a control plus or a command plus
Control plus.
Yep.
Okay.
Depending on your operating system to
okay.
just increase those figures for everyone to be able to see more clearly.
I gotcha. Okay, I gotcha. Right here, right?
Is that good? Yeah. But thank you very much.
There we go. Okay,
That's a
thank
spot.
you. Thank you. Okay, so here's what we were talking about. Here's when demand hits a peak and begins to decline, good time to reduce your exposure to the market, particularly if options are expiring. There's a calendar. We have it. If you go to marketstructureedge.com and go to the FAQs, the first FAQ is, you talk all the time about options expirations. Is there a calendar? There's a link there. So you can do that right at the top of the page. So then what we want to know is, well, is that when does it stop? When does the demand curve stop falling and return to rising? Well, if you look at the last few times, each of these times was options expirations, by the way. And so we'd say, well, we're very close to it, right? Very, very close to a bottom. And this is a good time now to find things that are worth buying. Let's go back to Nvidia and say, well, will the data, the supply-demand data, tell us whether Nvidia is a good thing to buy now? So let me zoom this in as well. We're looking at a fairly short period of time here, August 9th through September 20, but it's easy to read. So this is the demand curve for Nvidia, and this is price. So when demand begins rising and down below, this is short volume, supply. The market is furnished with borrowed stock. We borrow money, the market borrows stock. It's the way that the system works. And so generally that's a good time to buy. And when the demand curve reverts to the mean, or short volume rises above the trend, like right here, when those two things happen, we'll get out, particularly heading into options expirations. So what is the condition of Nvidia now? It's actually pretty good. I mean, it's right at 5. So 5 and short volume is a little above trend, but the trend is down. So we would want to go back test that data to see whether these conditions produce a good return. And we can do this mathematically. Everybody has to use historical data to try to determine what will happen in the future. And past performance is no guarantee of future outcomes, right? But we can profile what happens if you buy the tick above 5 in Nvidia. Well, over the last 90 days, well, if you bought and held it, you'd have done better. You'd have made 55%. But in 2/3 of that time, you could make a pretty good return. And it's about a 2/3 probability, 2 out of 3 chances that the stock goes up. How do I know? There are 3 times when this condition existed in Nvidia in the trailing 90 days, and 2 of those times it made money. Now maybe you could lose. This is a blunt instrument. It's saying if you bought the tick above 5 for sentiment, now demand is greater than supply, and you rode that to the return to 5 and the tick below that, this is what it is. Now, maybe we change our criteria, but I would look at this and say, well, Nvidia is likely to produce gains in a fairly short period of time even. So, but you want all of those probabilities in your favor. The more things that are stacked in the credit side of the ledger, the better your opportunity to make money, because it doesn't do you any good if you buy something that goes way up and before you get out, it gives all of that up and more. And it's the great bane of trading. People have a very difficult time taking gains. We don't have any trouble taking chances. So you want to get that order correct. So I would say Nvidia is okay. And it might differ a little bit from the technicals because the technicals take more time to develop. Supply and demand is basically a 10-day window because that's how the market works. Traders set prices in very short increments. Indexes and ETFs will make adjustments to the basket just every few days. There are resets to options expirations once a month, and month-end window dressing, that's coming up next, and it'll be quarter end this time. And that stuff is going on all the time. So that you want to take your gains and then look for the next thing and keep taking gains. I'm out, I've sat out of the market, so I don't have all of this volatility, and I've got this cash ready to deploy in the things that make sense. It's not grand, there's not a lot of glory in this kind of effort, but there's a lot of money in it, and that's what you want.
I think that's a mic drop moment. And then so Jordan Belfort is asking, could you just elaborate in general on month end or quarter end window dressing?
It's nice of you to tune in, Jordan.
Busy guy loves the show.
So month-end window dressing, it means that if you're a hedge fund, you want to make the client's money that you've got invested look good. So you're going to try to make your portfolio performance look good by month end because typically you're telling your clients every month, how are we doing? And then if you're an index investor, you need to be tracking the benchmark. You could hold a basket of stuff that reflects the index and then 2 of your things go wonky. Now you're not tracking the benchmark. And the objective of passive money, people have a really hard time getting this through their heads. Stock pickers want to buy things that outperform the benchmark. The only thing passive money wants to do is track it, is be the benchmark. And the worst thing that can happen to you as a passive investor, it's as bad as underperforming the benchmark for stock pickers. If you can't beat the benchmark as a stock picker, people don't give you more money. If you can't track the benchmark as a passive investor, people don't give you more money. So they have to do that by month end. That means they're going to remove stuff that is not tracking the benchmark and try to add stuff that is. And you get that done T+2. So if the last day of trading is September 30, the 28th, 29th, 30th, that's where that stuff's going to occur. And that will cause things to behave in unexpected ways. But now you know why.
Beautifully stated. Do you want to take some tickers from chat?
Yeah, let's do it.
Let's do SENS. I'm not sure that one.
Sensei Biotherapeutics?
No,
Or is that it?
Senseonics
That's not
Holdings.
Senseonics. If we don't,
this is not one that's widely.
There,
not a lot of platforms have this.
Okay, so there will be two reasons we don't have a ticker. A, it has less than 20 days of trading data. We need that much data in order to get behavioral patterns and comparatives. We can't figure out sentiment if we have 2 days of data. So it takes us that long. That's one reason. Number two, if it's not in the national market system, meaning if it's an NYSE American stock, different set of rules. There are only 350 companies traded there. There are about 10 basis points of overall market cap, but because the rules are different, the data don't work. And then there's the whole Wild West scene of the over-the-counter market, the OTC, the pink sheets, the gray sheets, 10, 11, 12,000 issues, but they don't have the same data rules. So it requires those are the two reasons we might not have it. So apologies if we don't have one.
What about,
let's try
do you have Lucid Motors?
I'm sure we do.
Okay.
I would sure think so. Lucid Group. Yeah.
Thank you, old man Chip.
Okay, yeah, and we can look at the whole EV group. So look at the fabulous condition in Lucid. Right? This is exactly what you want to buy. When you see demand rising, let me zoom this in. We'll look at the demand side first. So when this line starts to ramp, particularly above 5, now you have excess demand. And then you go down and look at short volume. The supply chain has not kept up. So if the supply plunges and demand rises, what happens to price? It's not an absolute, because there is the extreme outlier case where something causes that to change suddenly. Earnings can do that. A pandemic could do that. Those sorts of things. But otherwise, you're mathematically highly likely to make money when that condition exists. So if you're using Market Structure Edge, which, by the way, you can try for free, doesn't name an email. You can try it. Create and you can go profile it. That's the very next thing to do. I want to backtest the data and make sure that this is going to work the way I expect. Yeah, it's fabulous. 33% in 47 days. I never stay that long, because that 33% probably comes a lot sooner than that. But now I could create an alert to tell me I want that condition when it happens again. So I'm going to create an alert that tells me the next time that happens with Lucid, I want to know. And so, but that's fabulous. Very good pick. And when do you leave? If the supply side starts to rise and the demand side starts to drop, either one of those conditions, after a gain like that, take the gains, not the chance.
How about Pfizer?
Pfizer, one of our great fives. Pfizer is oftentimes a great metronome for the market. And when it's above 5, it really does produce returns. So let's expand the view out. I'm just going to go out to what we call the profile or default. So when it's a 5, it's not going to give you outsized performance. It's fine. 5 is fine. The rise above 5, there's where all the returns are. And look at how similar this is to Lucid. So the demand side rises and the supply side falls below trend. Well, as soon as that condition reverts, get out. That you can make a very nice return in there. That's how to, and you could trade Pfizer over and over and over that way. Right now, it's not good because it's spending more time below 5 than above. So you want to buy the rise above 5. If you don't have it, find something else, because you're not going to have a good mathematical probability of a return.
How about CrowdStrike, CRWD?
Yes, a periodic crowd favorite, pun intended. Well, and it has been. You know, here there's an interesting feature here. So again, buying rising demand worked really well. You could also buy one. There are 3 things you can do on the entry side. You could buy a 1, you could buy the uptick, you could buy the rise over 5. Clearly, the rise over 5 is a lower risk proposition because you already know demand's on your side. But it also means maybe you miss out on all the gains from 1. And we always backtest that. And then on the exit side, you know, you can exit on a 10. If it's all the way at 10, maybe that's the time to leave. A downtick or a reversion to 5, just below the mean. So here, this was a very short trade because look at the supply side. The supply side did not give us as good an advantage as it did in Pfizer or Lucid, because the supply side continued to rise. So that tends to blunt your returns. You know you're not going to get a lot of return. There's no way that anyone could say, okay, sell right here. I wouldn't. I would be looking at the supply side and saying, well, it's still well below 50. So I would have stayed. I would have stayed to this point. But if the price begins to drop and it's a 10 and short volume is rising, then you take what you got. Just take the gain and go. The math is telling you that you should. So again, here, what would you expect? Well, it's back to a 1. I mean, is there a possibility for a return there? Yeah, there is. It's again a situation where you could go back test that. I'd run it in Profiler and say, I want to see what's the best mathematical probability of a return here. So I don't know why that happens. The world of software is not perfect. Let me run a different time frame. Okay, here we go. So I want to check each of these things. So if we bought the uptick in CrowdStrike, which is when it ticks up, so that tells us, here's what the graph shows us. 40% returns buying and holding. Look, it's been a great buy and hold stock over the trailing 90 days. But if we don't want to spend all that time, could I get 26% in a lot less time? Well, buying the uptick says, yeah, but we're counting on returning to 5. So it spends 56 days above 5. There you go. Stock that spends more time above 5 than below it tends to get returns. What if I sold 10? Would that be better? Well, the good news is it shortens my time frame and improves my return. So right there, I know if I profile that condition, there are my target entries and exits. I may leave sooner, as I said. If it's up 20%, take it. If it occurs in less time. But we could look at this and say, now we know that we have a pretty good probability of producing a return. Here's another beautiful thing about CrowdStrike. The return, we have a 100% probability in the trailing data of producing a return because every single trade period produced a return. I always look at that because that gives you that's a really high probability trade. I would, once again, create an alert for that and say, I'm buying the uptick in CrowdStrike. Yeah,
that's amazing.
That's good.
That's amazing. All right, one more.
Okay.
We've got 2 requests for it. So Palantir.
Yes. Well, it routinely the most searched stock on the whole global internet is Palantir. Interestingly.
Really?
Yes. It's routinely among. We can check this too. One of the most searched stocks by the Edge mob as well. And it's been fabulous recently. If you can't profile a good return in Palantir, don't trade it. I like to trade Palantir. There have been months where it was no good at all. If we look at the last 90 days, look at the supply side trend. So short volume has been trending down. So this little blip here, options expirations, once again, there's a lot of people betting on options in Palantir. Very challenging. I mean, clearly, if it's hitting 10, even with this dip below, the beautiful conditions, and it did produce a nice spike, but it's going to be very brief because of options expirations. But again, you look at the data, every time it's above 5, it does very well. So once again, you could profile that and say, I want to know, is it buying the uptick? Is it buying the rise over 5? Very simple to look at the math to see which of those 2 conditions produce returns. But it clearly does. If it's not if Palantir stops getting to 10, move on. That's telling you that everybody's overweight Palantir that holds it passively, and you got to wait about 90 days for all of that stuff to wash out. In the meantime, go trade something else. Go trade Pfizer. Take your little gains in Pfizer. Wait for the Palantir opportunity to develop again. Come back and make 30% on Palantir. If you did those 2 things during the year, you would absolutely crush the S&P 500's returns. That's all you have to do.
MarketStructureEdge.com, everybody. Tim Quast, thank you so much for being here with us today.
Thank you for the privilege of being with you, Neil. Always enjoy it. Thank you. AB, good to see you.
Yeah, AB's here too. Yeah, always great. Everybody loved it. Everyone like and subscribe for Tim Quast, and make sure you get over to Market Structure Edge free trial if you haven't got one already. Tim, have a great rest of your day, my friend.
Thank you. You as well. See ya.
See ya. All right, what do we got going up next there, producer AB?
We have the Roadmap, Benzinga's very own NFT-based show with Chris Kachi. So if you're interested in NFTs or learning about what the next big project will be, join us on Roadmap, starting up right now. I'm going to go ahead and drop a link in the chat to head over to Roadmap.
And I just want to thank everyone for tuning in for this especially special Tuesday edition of Get Technical. We will not have Get Technical tomorrow because we have our electric vehicle conference, EVCon. All right, get on over to EVCon. All right, I think we even got evcon.com, I'm pretty sure. Nope. Wait, what? Wait, BZ EVCon. There it is. BZ EVCon. The website is really cool. So, Aaron, what's happening? Wait.
I don't know. I lost your audio for a sec.
Wait, is my audio here?
Yeah, now I got you.
All right, get on over BZ EVCon. All right, learn everything here from leaders in the space so that you can do your due diligence, put together your little theses, your fundamentals. I know there's some fundies hiding here. Get on over there, Gary. Big shout out. Thank you for the. So at any rate, guys, Roadmap up next. Thanks for tuning in. I will see you on Thursday.
Peace.